Hello and welcome to today's video. Today I will be covering the latest earnings and call from Duolingo, after which followed depressive price action. Shares went from highs of $170 to low $85 and managed to eventually finish the week just above $100. If you are looking for a solid investment broker, I personally use Interactive Brokers. They have decent platform with great mobile app. Stocks, ETFs, options are just to name a few optionalities they offer, combined with low fees, of course. Use my link in the description in the video to earn up to $1,000 in their stock. Now disclaimer. Before we start, disclaimer, nothing here is a financial advice. I'm just one person with a microphone. Always do your own research. Based on the market reaction, one could have expected a significant miss in their results. However, the company once again exceeded its own guidance across total revenue, bookings and adjusted EBITDA. One area that I personally found less encouraging was the growth in daily active users, which increased only 4.3% quarter over quarter. While still positive, this pace may raise questions about the strength of user momentum going forward. Now onto their medium to long-term goals. So management reiterated its ambition to reach 100 million daily active users by 2028. At the same time, they are guiding for roughly 20% growth in 2026, which would bring the platform to approximately 62 to 63 million daily active users. This suggests that they expect the current product and monetization changes to eventually translate in a meaningful reacceleration in user growth. Whether this materializes remains to be seen. However, even if the company were to sustain a 20% annual growth rate over the next few years, it would still meaningfully expand its share of the market, creating a larger base for monetization and ultimately supporting higher revenues and profitability over the long run. Still, delivering on these targets will be crucial. As recent price action has shown, markets can be highly unforgiving when even a small degree of doubt begins to emerge. In an environment where expectations are elevated, consistency and credibility often matter just as much as absolute growth. Management emphasized that the path toward 100 million daily active users will revolve around improving learning outcomes, increasing investment in the product, and reducing friction within the free tier experience. In the near term, this strategy is expected to weigh on bookings growth and is reflected in the more conservative guidance. In their initial outlook for 2026, the company guided for bookings growth in the range of 10 to 12%, revenue growth between 15 to 18%, and adjusted EBITDA margins around 25%. In my view, these are solid figures. The company is prioritizing long-term user expansion and product quality while continuing to deliver double-digit top-line growth and strong profitability. On the language front, management plans to expand access to the video call feature with Lily from the max tier to the super tier. At the same time, they intend to increase speaking practice across the entire user base, both free and paid, by allowing learners to respond to the most exercises using their voice instead of tapping or typing. They will also continue investing in advanced content. The goal is for the 9 most studied languages to offer material up to Duolingo score of 129, which corresponds to a B2 level on CFR scale. At a broader level, the company aims to reduce friction for free tier users in order to bring more people into the ecosystem. That includes initiatives such as fewer ads and unlocking additional features for non-paying users. The objective is clear. First, onboard users more effectively. Second, turn them into habitual recurring learners, and over time convert a portion of them into paid subscribers. Another important focus is strengthening word-of-mouth dynamics. When users genuinely enjoy the experience, they tend to talk about it as an interesting activity or even a hobby among friends. That organic sharing fuels the flywheel effect and lowers customer acquisition costs over time. Closely connected to this are marketing efforts and virality. The company continues to lean into social networks, customized ads, and content tailored for specific user segments. The combination of improved product experience and target distribution is designed to amplify network effects and sustain long-term growth. Lastly, they are investing more in their new courses like chess, math, and music. If we take management's long-term vision at face value, this would imply that Duolingo, at its recent low of $85, was trading at roughly 1.65 times forward sales and about 6 times forward adjusted EBITDA. For a company still guiding for double-digit revenue growth, expanding margins, and targeting meaningful user growth acceleration over the next several years, those multiples would suggest a valuation that assumes very limited execution for success. The key question, as always, is not whether the targets sound ambitious, but whether management can deliver on them consistently. If you believe management can execute on its roadmap, then this setup points toward the potential for a meaningful re-rating. In that scenario, the narrative shifts from questioning whether the company can deliver to asking when the market will begin to reflect that execution execution in multiple. Re-ratings typically occur when uncertainty declines. That could come from a few quarters of consistent daily active user acceleration, evidence that reduced friction in the free tier is translating into stronger long-term monetization, or sustained margin expansion alongside double-digit revenue growth. With currently depressed expectations, the bar is no longer perfection, it is proof. If that proof starts to materialize, sentiment can shift quickly. What makes this particularly interesting to me is that valuations are starting to look far more attractive, assuming you believe there is another meaningful leg of growth ahead. Management ambition to eventually double the existing user base clearly places the company in that high growth category. My framework is based on operating cash flow over the past several years and the average multiple the market has historically assigned to it. Over time, the stock has traded at an average price to operating cash flow multiple of around 129. That is undeniably high. However, when you look at other current market favorites such as Palantir Technologies, trading above 100 times its operating cash flow, or Tesla, still hovering above 70 times, it becomes clearer why Duolingo has increasingly caught my attention. At recent lows, its price to operating cash flow multiple would sit closer to 13. If we project forward and assume operating cash flow could reach at least $700 million within the next 2 to 3 years, implied upside becomes significant. Using historical valuation ranges as a reference point, that would suggest potential undervaluation of roughly 95% from the current levels. On that basis, my minimum bull case price target would be $166. In a more optimistic scenario where execution is strong and most initiatives deliver as planned, a 2 times multiple expansion would point towards $251. A maximum bull case assuming a 4 times expansion would imply $421. And even those figures are, in my view, relatively conservative. My bear case centers on a scenario of partial AI-driven disruption combined with a failure to execute on a meaningful portion of management's stated goals. In that outcome, the market would likely compress the valuation towards a mid to high single-digit price to operating cash flow multiple. That would imply roughly 40 to 50% downside from current levels. Also, this can happen with some black swan event like a new war. While I view this scenario as relatively unlikely given the company's execution so far, it is still an important part of my framework. Understanding what the downside could look like if things go wrong helps set realistic expectations and keeps the investment thesis balanced. Now on to one of the more interesting ideas from the latest call was how management frames market saturation. Instead of looking purely at the total addressable market in dollar terms, they focus on penetration as a percentage of country's internet population that uses the platform on a given day. In the United States, roughly 2% of internet users use Duolingo daily. In Germany, that figure is closer to 4%. That lens changes the conversation. If their long-term mission is to make education accessible to everyone, and they were able to reach just 2% daily penetration across each major internet markets, that alone would imply more than a doubling of their current global user base. And that is based on a relatively modest assumption. Now take it one step further. What happens if penetration rises meaningfully above 2% in large markets? From that perspective, the long-term opportunity starts to look far larger than what short-term volatility in bookings or quarterly daily active users growth might suggest. Execution is still the key variable, but viewed throughout a penetration lens rather than a saturation narrative, the runway appears anything but exhausted. Here are some interesting quotes that I think complement my thesis on Duolingo. You can pause the video and take your time while absorbing the ones related to Spotify, CFR score, language ads, and competitor Kumon descriptions. Lastly, some closing thoughts. So understandably, the market is cautious given the conservative guidance and the recent slowdown in daily active users growth. However, a pattern has clearly emerged over the past several quarters. The company beats its quarterly guidance, provides a cautious outlook, the stock gets punished sharply, and then the cycle repeats. We have seen this sequence play out multiple times. My view is that it is only a matter of time before the stock breaks out of this unfortunate loop, provided execution remains strong. Historically, management has not only met guidance but often exceeded it. As long as that continues, fundamentals should eventually reassert themselves. That said, the waiting period can be brutal. I am reminded of something that crypto analyst Benjamin Cohen often says about altcoins: just because something has fallen 90% does not mean it cannot fall another 90%. In the past, I would have argued that this logic does not apply to equities in the same way. With more experience, I have come to realize that extreme downside moves can absolutely happen in stocks as well. However, if you manage to identify a genuinely strong businesses amid that volatility, the long-term rewards can be substantial. I believe Duolingo has that potential to be one of those cases. Of course, the thesis can change. This is precisely why closely following the roadmap and execution is essential. It helps separate real fundamental shifts from market noise. It is easy to criticize what is already down and celebrate what is already up. It takes a different kind of mindset to lean into uncertainty when sentiment is negative. But if you want results different from the majority, you cannot always act like the majority. That has become a guiding principle for me. That wraps up this video. I will revisit the story after the next earnings report or any major thesis shaping event. Follow me so you can stay up to date if this content is of interest to you also. Full written dive on this topic you can find on my Substack. Also, for more daily insights and market updates, check my X, and for more educational content you can check my website. Like, subscribe as a sign of support, and see you in the next video. Bye.